Hello, everyone. We're here today to talk about FinTech and its role in expanding financial inclusion. If you have any questions throughout the session, please do use Pigeonhole. We invite you to be an active part of the dialogue. So we're here today to talk about this because the need for greater financial inclusion is great. While places like Singapore, Malaysia, and Thailand have a very high rate of financial inclusion, if you pull the lens back from a broader regional perspective, roughly 50% of adults in ASEAN have an account at a financial institution. Only 30% of adults have a debit card, and 29% of workers receive their monthly salaries from through an account from a financial institution. So the need for people to be financially included, there's still vast opportunity for more people to join the system. So we have today a panel of experts who are working actively in this region, and I'm going to give them a chance to introduce themselves one by one and explain a little bit about what they're doing in the space of financial inclusion, and then we'll kick off our panel. Ken, this is Ken Moore from MasterCard.
So thank you very much, Rashmi. Delighted to be here. So my name is Ken Moore. My role at MasterCard, so I run our innovation labs globally. That's a whole bunch of different things between our FinTech engagement programs and the new products and services that we build for the company as a whole, through to our showcases and all of the different events that we run on a global basis. But I think more specific to financial inclusion, one of the key roles of MasterCard Labs is MasterCard overall has an ambition and a goal to financially include 500 million people and small businesses globally that don't have access to financial services products today, and we are a part of delivering for that as MasterCard Labs. We have a purpose-built lab that we base in Kenya, in Nairobi, where we work with a bunch of partners to try and really build ecosystems in agriculture, education, and in micro-retail to financially include those people who are really underserved at the bottom of the pyramid. So I'm going to try and lean on that experience today and hopefully bring a little bit of that to life for this panel.
Great. Mark?
Thanks, Rashmi. We realized as we were preparing in the back that I think we all go to the same barber, except for you, Ron. So I'm Mark Jamison. I run our innovation centers in North America for Visa. Visa, as I'm sure you know, is the world's largest digital payment network. And I think I've got the best job in the company, which is basically your job as well. I get to work with our 15,000 financial institutions and 44 million merchants around the world, building the next generation of digital payments, which has direct applicability to financial inclusion.
Fantastic. Shawn?
Thanks, Rashmi. It's a pleasure to be here on the panel. My name's Shawn Ghaidan. I work for UnionPay. So I think most of you will know that UnionPay is China's bank card network, credit and debit card. In terms of financial inclusion, I think we at UnionPay over the last 15 years have really lived that in terms of being part of probably one of the fastest uptake of banking services that you would have seen anywhere in the world up to this point, and we've played a part of that. We haven't been all of that, but we've played a part in that in terms of being able to get our electronic network up and running for payments. So we now have in China over 5 billion cards issued. The vast majority of those are debit cards, allowing people to access their funds electronically in pretty much every merchant in China. So we put a lot of effort into making sure that we can put our card holders together with our merchants. And now we're starting to expand outside China. Our role in financial inclusion outside China has been more moderate than what we've done in China, but we're still very interested in making sure that electronic payments is a core part of where financial inclusion will be going.
Great, thank you. And Ron?
Hi. I'm Ron Hose. I'm the CEO of CoinsPH. We're a blockchain-based mobile finance company, mobile financial services company. So our mobile app provides financial services to over 2 million Filipinos. Things like remittances, cross-border and domestic, bill payments, airtime, and we recently became the most used finance app in the Philippines, and we're busy now actually replicating the same model and the same platform throughout other markets in Southeast Asia.
Okay, great, thank you. So we're going to kick off with a bit of a macro perspective of the challenges facing the effort to financially include more people in the region. So digital finance has tremendous power to boost GDPs and economies and improve the lives of billions of people. However, a number of regulatory, structural, infrastructure, and variety of other macro challenges stand in the way. So starting from a very broad picture perspective, what are some of the key macro challenges that you see to extending and expanding financial inclusion?
I'm happy to take a first cut at that. Financial inclusion is definitely one of the areas that's, it takes a village. So you can't just come in and solve it, even if you're the world's largest payment network. You have to work with your clients, you have to work with the regulators, you have to work with the governments, the NGOs, you have to work with a whole set of stakeholders to make this work. And I think part of it is structural, which is the way that it's traditionally been attacked is the banks, mostly, looked at it and said, okay, there's this huge opportunity to bring people into this formal economic grid. And so we have these things like credit files or credit bureaus, and so we're going to have forms where people will fill it out and then they'll get our entry-level product and we'll help them and then it will sort of grow. But that was a very financial services-oriented approach. And frankly, that is just, it doesn't move the needle fast enough. And I think what's now happened because of the digital transformation that's happened and the fintechs that have come in is they've approached it from a very different angle. What they've said is, there is a vast emerging middle class that's happening in the world. And if we can get them onto the formal economic grid, there's all this goodness that happens. Like the theft goes down. You can fund businesses that then grow and can do have all this great economic impact. And oh, by the way, if you take a human-centered approach, these are people who have hopes and aspirations for their life. They're not just an account. What they want to do, they want to send their children to school. They want to, buy a motorcycle, which will help grow their business. And so they're attacking it from the customer's perspective and putting the building blocks together and making it easy and removing the friction to move them onto the formal economic grid, and then all the goodness starts to happen.
I mean, maybe if I could build on that a little bit as well, because I think there's a big difference market to market, right? Some markets really have the kind of foundations in place. So, when you think about the kind of foundations of financial inclusion, it's a mobile infrastructure, it's a form of identity like Aadhaar in India or the things in other countries, and it's a comfort from a kind of regulatory compliance and ecosystem perspective that we're doing this for a good reason, right? Now, if you look at those conditions, they don't exist uniformly. You've got markets like India, where most of them exist. You've got markets like Bangladesh and others where they really don't. So I think you've got to make a distinction between markets where a lot of the macro challenges are really about trying to create the baseline infrastructure, and I think all of us here would really probably make a point there around, we're there to help you piggyback on our abilities, on our capabilities. We're API enabled. We have infrastructure plays that can help you into those markets. And then in other markets, where the infrastructure already exists, I think it's around creating behaviors and patterns that actually drive it, because we see a lot of kind of sporadic usage of financial inclusion products, but do we really create the behaviors that will sustain over time? And how do you do that? Well, it's about removing fear, because sometimes people, by being included, they become visible. There are tax and other considerations and genuine fears that people have that need to be allayed, but also you got to create value for people. And you've got to tap into the things like G2C flows that are really going to kind of sustain over time. So I think two different approaches, depending on whether the foundation's in place or not.
I think that when you're looking at the challenges of financial inclusion, the governments do have a role to play. And I mean, from a regulatory point of view, some of the things that are happening are really great in that the governments in Thailand and other countries are saying, we want to go cashless, we want to include, and by its very nature, if you're going cashless, you're including everybody in the financial world, right? But at the same time, we are seeing regulations being put in place around restricting money movements, restricting KYC, putting really a lot more effort into knowing your customer and that kind of thing. And for the people who are really at the bottom of the financial chain, that makes it difficult for them to get in. So when you look at what we're looking at now in China, and we've been doing part of that, is things like eKYC, tying it to things that are already known, because at the end, when you're at that sort of the bottom of the food chain in terms of society, not just financial inclusion, what you're looking for is a safe place to put my money, the little I have, and perhaps a line of credit. If I, and I think, Visa and MasterCard and ourselves, especially Visa and MasterCard, are the biggest suppliers of access to credit in the world. And surely there must be something that we can jointly do in order to say, well, we're supplying credit to, a lot of people who need it. How do we push that down? Because I mean, microcredit and those things are great, but in those sorts of societies, what we're finding is most of the lenders are actually unregulated lenders, and we want to be able to try to bring that back into what we would call the more regulated, the more wholesome world of microcredit, those kind of things. So somewhere safe to have your money, perhaps access to a line of credit. Right there, you've given people a lifeline that they didn't have before.
Do you have anything?
Yeah, I mean, I think most challenges in emerging markets come down to reducing friction. So it could be friction for consumers to onboard to a product, like in the form of KYC, which can be reduced by doing things like adaptive or risk-based KYC. Regulators can have a hand in that. It could be a friction because it's difficult to actually deposit funds and move liquidity into financial services, right? If you want to buy an insurance product, but there's no way for you to pay. So creating more efficient bridges between digital and cash. It could be friction actually between inter-providers, right? So one of the things that we see a lot is the entire financial services industry is actually highly fragmented, and a lot of times people in the short term have adverse incentive to collaborate, versus in the long term actually collaboration can increase the pie for everyone.
And just one follow-on question, because you touched on many different themes, the issue of IDs, the issue of regulating, the issue of having people who are currently not visible become visible. What's the role between private and public efforts to address these issues? Because some of them aren't entirely industry problems, right? They're structural problems with governments and regulators. So how does that partnership develop, and how do you help move things forward?
So I'll take a go. I mean, I think partnerships are key, right? If you play across the ecosystem here, you've got to create a driver for change, whether it's a very dramatic thing like was